Does value investing work? That is the topic of this video. I'm going to be going over my personal record since starting the channel. And we're going to go over a few examples. And at the end of the video, we're going to see if it actually works. If you're new to the channel, my name is Dan. I'm all about some value investing. So if you're into that kind of thing, hit that subscribe button so you can see more videos like this one. All right, let's get started. So value investing is the practice of trying to buy stocks for less than they're worth. You're trying to buy something and pay less than you're getting out of it. Embedded in the entire practice is a very specific assumption about market efficiency. That is, we are assuming the market is not fully efficient for all stocks at all times. We believe we can find good deals. However, we also believe that eventually the market gets the price right. So if I buy an undervalued stock, I have belief that eventually the price will rise because other people realize it's worth more. Now, does it really work? I'm going to go over a few categories of stocks that I've analyzed in the past 3 or 4 or 5 months. And I'm going to look at the average return I got on these stocks compared to the average return I got on stocks that I did not invest in. Then I'm going to compare all of that to the S&P 500. So let's get into it. So what we're looking at here is a little chart I made, and I have several stocks that I recommended, and I have several that I did not recommend. I said I'm not going to buy these. I have the date I made the video on. I have the price on that date. I also have the price as of today, April 14th. And I have the stock price return since that day I made the video until now. So that does not include dividends. It ended up being too much work to include dividends. So we're just going to look at the price return. Now, if you're looking at this chart here, it does not include every stock I've ever analyzed. I am not trying to handpick stocks here and make myself look good. What I'm doing here, because I've analyzed so many stocks, I'm trying to break them into a few categories. So I have military stocks. I have Chinese tech company stocks that I've recommended. I have tech stocks generally. And then I have, tech stocks that I did not recommend buying. I felt these were very interesting stocks to look at. They do exclude some stocks that I did not buy that have had good returns, like John Deere and Company. They also exclude some stocks that I didn't recommend that had very poor returns. And they exclude some big winners that I recommended actually, like Big Lots. That's one that I recommended that doesn't really fit into one of these categories, so I did not include it. Same goes for Target. But that being said, it's a pretty interesting group, and let's have a look at the average return for each category. Okay guys, so in this chart here, you see that since the beginning of January, the S&P 500 is up close to 10%. So a rising tide lifts all boats. You see that every single category here is positive. But let's compare to the market. Out of the group that I did not recommend for growth stocks, your average return is about 3.39%. That includes things like Amazon, Facebook, AMD, Microsoft, Salesforce, Broadcom, Square, and ServiceNow. Out of the group that I did recommend for tech, you're looking at an average return of close to 18%. That includes things like Alibaba, Baidu, Lenovo, JD, Joy, Google, Qualcomm, PayPal, Adobe, and Dropbox. Out of the military stocks, they're up close to 16%, not including dividends. They all pay dividends, so probably just rounded to 16% there at least. And that includes Lockheed Martin, L3 Harris Technologies, and Huntington Ingalls Industries. So just based on the chart, it does appear that value investing is working, at least in the first quarter of this year. We are beating the market. If you're enjoying the content so far, please hit that like button. Really helps the channel a lot. Thank you. I also think that chart highlights something interesting in that the entire military stock sector there was quite undervalued around January, February timeframe. So that happens in markets. There are times when a certain sector, an entire industry, is just neglected. The whole market outlook for the industry is overly pessimistic. These are great opportunities. Now, at the same time, I definitely feel there's other industries that are overheated. The market is overly optimistic right now. I think you see a lot of that with the semiconductor stocks and some of the other tech stocks. The last thing I find very interesting when you look at that long list of tech stocks that I either recommended or didn't recommend, you'll notice that you got to be careful with your a priori expectations. So I came into the analysis usually believing tech is overvalued, but you have to let the numbers speak. So for example, when I did Google, I found it was actually undervalued. That really ran counter to everything that I had thought going into it. But you got to trust the numbers, and it turned out Google was quite undervalued. It's performed very well since then. Alright guys, that's all I got for this video. I really hope you enjoyed it. Thank you for watching.